Trade war disputes are not currently in the news, yet we see Australia and New Zealand hemorrhaging because of the Chinese renminbi selling off. Let's talk about it here at Capital Markets. Traders, what's going on, guys? Welcome back to Capital Markets. It's your host, Cleveland Bishop. Hope you guys are having an amazing week so far. U.S. session just now started off. It's Tuesday for us here in the U.S. and I hope you guys are journaled up and know what's happening fundamentally and have a good picture view technically of what you see going on in markets today, okay? Because here at Capital Markets, we're going to be discussing both. So make sure you guys subscribe, and if you guys ever have any questions, comment right down below. I'll be right there to answer away, all right? So Donald Trump and the president of China have not been in the news lately as they were in August and as they were in July in regards to what's happening trade war wise. Yet we see a massive selling of the Australian dollar and the New Zealand dollar. Okay, so we talked about this before, how Australia and New Zealand are really piggybacking off of the entire Chinese global economy. Okay, so anything China does in regards to strength or in regards to a bear market, you usually see the Australian currency follow suit. Okay, Australia's largest exporter who buys their goods is China, and that's the same thing with New Zealand. And here's a quick screenshot view of Australia and New Zealand. You guys can see a massive selling. Okay, when it comes to Australia, Australia is the worst performing G10 currency in 2018, and right behind it is the pound, but Australia is leading the way, and that's mainly because of what we see happening right now with China. Now, if you include New Zealand, which is going to be in your G20, then yeah, New Zealand and Australia are definitely the top 5 worst performing currencies in 2018. Okay, so this is why it's so important for you guys to track what's happening from a fundamental perspective. This is going to allow you guys to be able to execute on moves that otherwise technical traders wouldn't really be able to conceptualize. All right, so now where can this market go? Okay, right now we do see that there is still more sell side potential, especially for the Australian dollar. Australian dollar is nowhere near its lows. Here's a quick screenshot of the Australian dollar on a weekly picture. This thing still has some sell side move that is possible. All right, so this is something that we'll be keeping an eye out on, and that you guys also should be keeping an eye out on. We could continue breaking structures lower that could lead us to other resistance targets. Okay, and that is basically where we'd be profiting from. But we also have to take into account the likelihood of a potential resolution with this China and Trump trade war debacle happening right now. What if things start to calm? What if the tariffs are actually lifted? You're going to see a massive resurgence of capital back into New Zealand and back into Australia, because people are going to be looking at these markets and seeing how they're trading at a discount. All right, so that's something that I am always keeping an eye out on. If these markets start to reverse, or if the whole ideology as to why these markets have sold off starts to cascade around markets, you're going to have yourself a short squeeze, which is when all these people selling this Aussie dollar gets trapped when these markets start to reverse. Okay, now outside of that, we have the GBP. Finally, we're seeing the Euro GBP at some highs. We were stuck in some serious consolidation for all of Q1 and really almost all of Q2. Here's a quick screenshot of the Euro GBP. Whenever you're looking at the GBP, you're usually pegging it to that Euro. I know a lot of folks look at that GBP USD, but Euro GBP is a very important currency pair. Okay, so right now, again, it's not looking too good in regards to Brexit, and something that came up recently is Ireland. Basically, the European Union wants a border between the UK and Ireland, because Ireland would still technically be somewhat a part of the European Union. They want a border there. They do not want free trade there, okay? But obviously the UK, they want free trade with Ireland, and Ireland wants free trade with the UK. So those type of hard Brexit rulings are really hurting the currency right now. And then obviously we also have seen a lack of investment capital from overseas investors coming into the United Kingdom, and that of course is hurting GDP. It's hurting its current accounts, and we also are seeing a little bit of a slowdown when it comes to trade as well. Okay, so again, these are the main key reasons why we do see that the GBP is selling off, and it of course also has a likelihood of continuing in that same fashion if things don't get resolved. Okay, just a few weeks ago, Angela Merkel mentioned that a hard Brexit wouldn't be such a bad thing. It wouldn't affect markets too maliciously, but again, we'd have to see for ourselves. We have many times where different leaders and prime ministers will say certain things will happen, but they're usually not too good at forecasting what's going to be happening or what's going to happen inside of their actual economy. And then lastly, the US, I do want to touch on the dollar. We do have some dollar news. Last week we had an amazing NFP that came out. Here you guys go. Quick screenshot of what NFP looked like. And this week things are a little bit calmer, but it does look like we're going to be raising rates this month here in September. And we have seen a little bit of dollar weakness happening, but mostly the dollar's been consolidated over the past 5 or 6 trading days or so. So we're really just waiting to see where this market breaks out. All right, so when we talk about the dollar tomorrow, I want you guys to be here. Any dollar questions you guys have, put them down below. And if you guys need help finding a broker, just head over to capital-markets.com. We're one of the top brokers in the entire industry. Okay, we have some of the tightest spreads, and we route from some of the best liquidity providers. All right, tight spreads means you're paying less and less per trade, and liquidity providers make it so that you get filled instantly. Okay, that's going to be really important for all the day traders and the scalpers. Okay, so guys, look, head over to capital-markets.com. My name is Cleveland Bishop. I'll talk to you guys tomorrow.